Alright guys, so things are just getting messier. The economic war isn't over yet, not by a long shot. As the G7 confiscated Russia's reserves, Putin is now making his own move to isolate Western assets. For many years, even after the war, Western banks are still operating in Russia. This might surprise you, but they're making a ton of money in the country. Just last year, Western banks stuck in Russia paid nearly a billion euros in taxes to the Kremlin. So, in a sense, Russia is also extracting profit from G7 assets. Thanks to the sanctions, Moscow can't access the SWIFT system, and that means no access to payments in dollars and euros. To circumvent this, EU banks in Russia, they are a big financial lifeline. So in turn, the banks, they jack up their fees and commissions go through the roof to the moon. Take Raiffeisen Bank for example. It's a bank from Austria. In 2021, Russian profits were less than 600 million euros. But last year, this has grown to an incredible 1.8 billion. This is a threefold increase. On the flip side, they also pay a much bigger tax, 464 million euros to the Kremlin. Now, of course, the G7 wants the banks to exit Russia, but Putin isn't going to let them go, which shouldn't be a surprise. The West has confiscated 300 billion from Moscow, and these banks they allow Russian entities to transact in Western currencies. Raiffeisen Bank or RBI is trying to exit Russia, taking away 1.5 billion euros in profits. However, that isn't going to happen anytime soon. Russia has frozen the shares of the bank and blocked the sale. The bank is effectively trapped in Russia. Their money and their operations simply can't leave the country. And this is how bad the G7 Russian relations are now. It's just one big tit for tat economic war where everyone suffers together. So while Putin builds a new financial system with the Chinese, EU banks are trapped and it's business as usual. Billions of dollars are stuck in Russia, but more importantly, Western financial architecture is still open to Russian companies. And this is a very big loophole in the G7 financial sanctions. If we look at the data, RBI has 2,600 corporate customers and 4 million local account holders. And these are businesses and people who can buy and sell Western currencies. Companies can still get payments in dollars and euros. People can still access the SWIFT system. But wasn't the West supposed to cut Russia off completely?
We've now sanctioned Russian banks that together hold around $1 trillion in assets. We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself, cut it off from the U.S. financial system. And today, we're also blocking 4 more major banks. That means every asset they have in America will be frozen.
Now, this was back in 2022 when the West first sanctioned the Russian banking system. It's very clear today that there are still avenues for Russia to trade with the world. They are actively transacting with China using the RMB and the ruble to settle their trades. Around 90% is done outside the dollar, and Beijing is Russia's biggest trading partner. But here's the big question, why doesn't the EU cut away Russia completely from the banking system? Now, the answer is very simple because Europe still needs Russian gas. In May this year, Russia surpassed the US as the biggest supplier of natural gas to Europe once again. It's a clear rebuke to all the sanctions, and price really matters. We are seeing EU industries start to shatter. Even Volkswagen is on the verge of closing down their plants in Germany. That's a historic move and not in a good way. Even today, Europe is importing a significant amount of Russian gas. Majority of Russian gas in Europe comes from three main sources: LNG imports through the Turk Stream pipeline and the Ukraine transit pipeline. Volumes from these three pipelines haven't really changed. In Q2 this year, the EU bought over 12 billion cubic meters of Russian gas for their economy from just these three sources, and obviously Europe has to find a way to pay for it. It's a big reason why EU banks are still operating in Russia. They are paying for the gas with Western currencies like the euro. There's significant pressure from the US to close the banks down for sure, but if they do, Europe will have big payment issues. They'll be forced to pay in rubles or, God forbid, to them, the Chinese RMB, and that only benefits Moscow or Beijing. So the EU banks are caught in a real twist, in a bind. And even if they wanted to leave, Russia doesn't allow them to. Beyond that, there's even more money stuck in Russia. Billions of dollars in Western profits are trapped in the country. Around $18 billion of earnings could be frozen or immobilized. Russia has lost their national reserves and they are very pissed. They could always retaliate against Western companies on Russian soil. In May this year, it's estimated that over 2,000 foreign businesses have remained in Russia. Less than 400 exited the country, and those that left, they paid a high price to do so. Let's not forget Russia imposes a big exit tax to leave. Now, can this match the 300 billion seizure from the G7? Maybe yes, maybe no, but a lot of companies are on a hook in the months and the years to come. Now, this nightmare gets even worse, and we are, of course, talking about the US dollar. Everyone knows the dollar is the world reserve currency. The majority of transactions are done with it, well over 80 or even 90% in some areas of the world. But big cracks are forming, especially when it comes to being a reserve asset. Since the '08 crisis, countries around the world they are holding fewer treasury bonds. It has gone from over 55% to almost under 30%, which is horrendous news for the US government. Remember how the US economy actually functions. This is a debt-based economy that needs to borrow money just to survive. And if countries continue to shun US debt, it really opens up a whole can of worms for the world's biggest economy. So when demand for the bonds goes down, the yields have to stay high, and that jacks up the cost of just maintaining the debt. Now this chart is truly horrifying. This is the true Halloween story. US interest payments have reached over $1 trillion in 2023. There's this big vertical line up immediately after the 2020 lockdowns. Now part of it was the crazy stimulus money. Another is the borrowing of money to prop up the US economy. If the world does move away from the dollar, the national debt will fly to the moon. Interest payments would hit 2 trillion or even 3 trillion dollars by the end of the decade. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. There's a lot of uncertainty in the world today. We have geopolitical chaos and the values of fiat currencies getting debased. Inflation is not gonna end, and that's why I consistently buy gold to preserve my wealth. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. So there's a profound urgency from the US government to preserve the status of the US dollar. Because the borrowing from the US is not going to end, is a big reason why Fitch downgraded America's credit score in the first place.
The only option that really leaves our economy in good shape is, and our financial system, is raising the debt ceiling and making clear that Congress stands behind the basic principle that America pays its bills. We're not a deadbeat country. Yeah. And if that's compromised, even in the run-up to it, if it looks like we're going to go up against the ceiling and may not get it done, that will have tremendously adverse effects on financial markets and the economy.
Yellen basically gave away the playbook here. The borrowing must continue, and to preserve this status, anything and everything can be done. And now we have a very disturbing update from candidate Trump. If he's elected, he would punish the world for going against the dollar. Donald Trump is pledging a 100% tariff on countries that shun the dollar. The dollar is under major siege and he wants to flip the script. Now, this is definitely not a good idea. Many of Trump's policies make some sense for the US. But when it comes to trade tariffs, other countries, and this dollar issue, he's really off base here. It's important to take this seriously because Trump is leading in the polls, and more likely than not, a global trade war could be coming very soon in 2025. The US could start penalizing countries that stop using the dollar. They could impose a 100% tariff on goods coming into the US consumer market. In addition, we could see export controls and currency manipulation charges as well. So if a country XYZ trades using the euro, the yuan, or the rupee instead of the dollar, they could be whacked financially. Now, if you ever wanted a great decoupling event, this would be it. It's weaponizing the dollar and the US consumer market taking it to the next level. Now, let's consider the state of Russia and China. These two countries, they are completely de-dollarized. Will the US slap them with a currency manipulation tax? And how much will that be? What about the Middle East? What about Asia? Will the government go after them as well? Will they get punished as well? This won't end well for the US either. The US runs a huge trade deficit with the world, which means they import in a lot more than what they sell out. The Tax Foundation estimated the combined damage of imposing the Trump tariffs, and this is just the impact of a 10% tariff on global imports and 60% on Chinese products. The US would lose almost a full percentage point of GDP. In addition, almost 700,000 jobs would be destroyed. In other words, a complete disaster. Inflation will fly to the moon, and other countries will also retaliate with their own tariffs on US exports. Trump's dollar plan is really outlandish here. Once you force the world to use the dollar with a big stick to whack them, you'll just turn into the mafia. Countries would in fact de-dollarize even further. No one really likes being threatened. More bilateral trade will happen and fewer dollars will be recycled back into US treasuries. And here's why. When it comes to economic growth, the global south or BRICS will win. In 2024, the US is estimated to grow at just 2.7%, and that's despite the endless deficit spending. India, China, and the rest of BRICS will do much better than the G7. And all of these countries would much rather use their own currencies. It won't be a loss to abandon the US dollar for bilateral trade. So if America punishes countries for not using the dollar, they will simply do business elsewhere. They would buy and sell more within the BRICS bloc. BRICS will still be able to sell to the US, let's be clear about that. They'll just sell all their products through the middleman countries like Mexico, and that will jack prices higher for US consumers. This is desperate, this is crazy, and it will only boomerang back on the economy. Inflation will skyrocket, the deficit will explode, and people's standard of living, especially in the US, will literally collapse. And if countries choose to avoid the dollar, just think about this now. They also won't be buying US bonds as a reserve asset. So this plan isn't good. I really hope that Trump is just posturing. Because if he isn't, and that will be the day the dollar dies. But let me know what you think. Will Russia freeze and seize even more assets? And will the US really punish countries that shun the dollar? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.